Hello guys, welcome to another video in this series where we are solving the ISC Specimen Paper for accounts for the year 2024. In this video, we are solving the OR question under question number 7. So let's get started. Here, this is an admission sum and we are required to pass journal entries on Charu's admission. We have Amit and Pawan who are partners in a firm with capitals of 35,000 each. They shared profits and losses in the ratio 3:1. On 1st April 23, they admit Charu as a new partner for 1/5 share in the profits. Charu brings in rupees 40,000 as her share of capital. Straight away, we can pick this up as our journal entry on April 1. So, cash account debit to Charu's capital account, right? 40,000 being capital brought in by Charu. Okay, next part of the question says goodwill of the firm is based on Charu's share in the profits and the capital contributed by her. Charu brings her share of goodwill in cash. So we pass the journal entry for the goodwill as well. We can club that here with this journal or we can pass a separate journal. So we can do it. Let's club it here itself. Just that we will not know the amount for now to premium for goodwill account. The amount area, let us leave it blank, and this amount for cash will change as well. We have to do the working, however, we'll come back to it later on. And as we know, goodwill has this goodwill amount, it has to be distributed among the sacrificing partners in the sacrificing ratio. Let's pass the journal for that as well. Premium for goodwill account debit to Amit's capital account to Pawan's capital account. Okay, we'll put the amount once we have it. However, let's amend the narration as well here, being capital and her share of goodwill brought in by Charu. Being goodwill brought in by Charu distributed among sacrificing partners in the sacrificing ratio of 3:1. Now in this question, we only have Charu's new share being given, which is 1/5, the old ratio being given 3:1, and nothing else is mentioned. So in that case, the gaining ratio, the sacrificing ratio, is equals to the old ratio, which is 3:1. Okay. If you do a normal calculation and find out, it will come out to be the same. Let's move on to the next part of the question. Again, we'll come back to this for the amounts once we have the amount. At the time of Charu's admission, the firm had a general reserve of 60,000, from which 20,000 is to be set aside as provision for doubtful debts. Let's pass the journal for this as well. So you're creating provisions out of general reserve. Entry for that will be general reserve account debit. Now you can pass a combined entry here to save time. Straight away you can pass the entire entry together to provision for doubtful debts account, which is 20,000. The remaining 40,000, as per the rule, will be distributed among the old partners in the old ratio. So we get here to Amit's capital account and to Pawan's capital account. Remaining 40,000 will be distributed. So Amit would get 40,000 into 3 by 4, which is 30,000, and remaining 10,000 will be Pawan's share out of the general reserve, being general reserve, being provision created out of general reserve, and remaining balance distributed among old partners in the old ratio of 3:1. So general reserve treatment is done as well. We are done with number A. Let's move on to number B. Creditors of rupees 8,000 are paid by Amit privately, for which he is not to be reimbursed. So we are not transferring this to Amit's capital account straight away. We will do it via revaluation account. Creditors are decreasing, so creditors account will be debited. Creditors account debit to revaluation account. This will be 8,000, and this is the only amount going to revaluation, nothing else is there. So in that case, this will be distributed among the partners as revaluation profit. So next entry would be revaluation account debit, account debit to, again, Amit's capital account to Pawan's capital account. 8,000 will be distributed in the ratio of 3:1 again. So 8,000 into 3 by 4, that comes to 6,000, and Pawan will get 2,000. Narration, let's finish that off as well, being creditors paid by Amit privately, being revaluation profit shared among partners in the old ratio of 3:1. So we are done with number B as well. Number C says there is no change in the value of other assets and liabilities. There is nothing else to be passed as a part of journal entry. Now, the goodwill in this case is a hidden goodwill. We have to go to the working notes to calculate how much goodwill do we have. As you can see here, the opening capital is given to be as 35,000 for Pawan and Amit and Charu, 40,000. General reserve that we have is given to Amit and Pawan. Revaluation profit 6,000 and 2,000. So if you add them for Amit and Pawan, we get 71, 47 and 40,000. So if I add all of them together, total capital of the firm becomes 1,58,000. However, taking Charu's capital as base, total capital equals 2 lakhs. How? Because Charu brought 40,000 for 1/5 share using unitary method. 40,000 into 5 by 1, we get 2 lakh rupees. That is total capital of the firm that should have been if you take Charu's capital as base. So the difference, hidden goodwill, is the difference of these two amounts, 2 lakh minus 1,58,000, that is 42,000. Okay, that becomes our hidden goodwill. Out of this, we have to find how much is Charu's share of goodwill, which is 1/5 of 42,000, which is 8400. In that case, how much Amit would get? Amit's share as per the sacrifice, which is 3 by 10, 3 by 4. So 3 by 4 of 8400, that becomes 6300. And then we have Pawan's share, which is 2100. We just go to our journal and put these figures there. Goodwill premium is 8400, which Charu is bringing in cash, mentioned in the question. So this amount will change, 48,400. Here as well, you will write 8400, and this will be 6300 and 2100. All right, so your sum is done. If you have any questions, do let me know in the comments box below. And if you want to join the online classes for further assistance, you can let me know in the comments box below. I'll get in touch with you. Thanks for watching, guys. We'll catch you all in the next video with the next sum.